He who has a why to live for can bear almost any how. I thank the Lord I was able to support a family of 6 as a sole provider for a long time. And again, I didn't have any money. My dad was dead. And so I had to get serious about it.
Welcome, everybody, to another edition of the Trader's Mind Chat Show, where we talk to professional traders from around the world to get into their heads, their mindsets, why they think the way that they think. And today, we are super blessed to have Mr. Patrick Walker from Mission Winners on the show with us. Patrick is a 30-year trading veteran and somebody that I've been in contact with and admired for a number of years now via Twitter and other social media. And now we finally get to speak live here and in person. Patrick, thanks so much for joining us, man.
Thank you. Thank you for having me, Michael. I appreciate it. I'm honored that you asked me. Thank you, sir. Thank you.
Absolutely. So let's hear a little bit about some of your background, like how you got into this in the first place, some of what you've seen over the past 30 years of trading that maybe reminds you of what we're seeing now.
Oh, yeah. Yeah. There's a lot I can't tell you because I'm in the witness protection program, so we'll have to be careful. Okay. Okay. Just kidding. All right. A little bit of background for me. I'm Pat Walker. I'm from St. Louis, Missouri. I was grew up, raised here. Moved out west, lived out in Colorado, up in the mountains, lived out in Oregon, taught on the university level. My dad was starting to get sick years ago, decades ago, so I started to move back to St. Louis. I got involved in the investments field, believe it or not, in 1986. Okay. And I still remember. I started with a company, for you old people out there, a company called Dean Witter. Maybe some of you know it. Started with Dean Witter, worked with them, worked with a small regional house. But my background from teaching and things was always trying to figure stuff out. It's a big thing with me. I've been like that even with engines and stuff like this. And so I became a student of the markets immediately. And one of the things that really helped me was talking to some people that I worked with and doing research at the library. And I read this book because I watched Wall Street Week. Some of you probably remember Wall Street Week. I watched Wall Street Week, and there was a show called, or Lou Rukeyser was on Wall Street Week. And there was a guy who used to be on that show, and his name was Martin Zweig. I don't know if any of you know who he is. If not, do you? There you go. Sweet. Dr. Martin Zweig. I read his book, Winning on Wall Street. It is a great book. I encourage you to read it. You can say it's dated. No, it's not. I read his book. I studied it. I actually went to the library. And folks, again, this is before the internet. I started drawing charts by hand at the library, grabbing a Wall Street Journal to figure things out. And I subscribed to his newsletter. He's passed away since then. I subscribed to his newsletter, and I'm really thankful for this. My managed, and I'm not bragging, okay? Not me. My managed accounts were completely out of the market weeks before the crash of '87. We got out. And you can say, well, how did that happen? I had all these stocks and I had stops in on them, sell stops. Okay. And they would hit certain prices, and I'd go to the order window. I go, God, I don't remember putting an order in here today. And I go, I got stopped out of General Motors or whatever it was. And so I remember I had one
order window. So can you walk us through that? Like for me personally, like I've never been to an order window. So my first experience with trading, like I thought that you just go to the bank and you do this. And I walked into my local bank back in, for me, my first experience was like back in '98, and I just walked into my local savings bank and I'm like, I want to buy stocks, and they're like, you don't do that here, kid.
No, that's true. Okay, I'm sorry. Yeah, I'll probably say things like, what the heck are you talking about, man? Okay, when you're a broker, you have to fill out an order ticket, a buy ticket or a sell ticket. They were color coded. So I put an order in or whatever, a sell stop or something like this, and you give it to a clerk, and
right.
They would type the order in. They literally would have to type the order. Folks, this was before the internet. All right. This was before people phoning orders in. All right. I'm going way back. You had wire operators in brokerage houses. Type the order in, you'd wait, and then the order would get to the computer system, and you get an order filled normally within a minute. You sold IBM or whatever, and you were done. And that was the way it worked. It was nothing like it is today. Nothing. Today is much faster. and much better and more fluid, to tell you the truth. Well, I had sell stops in, and I'm sure all of you know what sell stops are. I had good till cancel sell stops. And I go to the order window, and I would constantly, for weeks before the market crashed, I was getting stopped out of stocks. Well, I was using common sense. I'm thinking, can you imagine if you lived in a neighborhood, or you're driving through a neighborhood and the house on the left is on fire and the house 5 houses down is on fire. A bunch of houses are burning. You're not going to buy a house in that neighborhood. Well, stocks were falling. I'm not going to buy any stocks. So I didn't. And then all of a sudden the crash of 87 happened. And I still remember sitting in my office, and it was historic. I remember going out into the bullpen, and I told everybody, all the other brokers, I had my own office, all the brokers, I said, we're going to see history today. And people say, oh, this is really bad right now. Okay, these drops that we've had, for us to equal what happened in 1987, we would have to fall well over 5,000 points in one day. Now, we fell pretty hard, but we didn't hit 5,000. Stocks were, Walmart was obliterated. It was downright scary. But this was really neat. I had a doctor whose account I managed, and I remember him calling me the next day, and he's crying. Oh, Pat, what happened? Are we okay? And I said, Doc, I said, I've got great news. I said, your accounts, your pension and profit sharing, you're flat. You haven't owned any stocks for a couple of weeks. He says, what? And I said, yeah, and it's not because I'm so smart. I learn from people. I'm a sponge. I don't reinvent the wheel. I just learn from people. And a guy who really helped me was Dr. Martin Zweig. And then I'll tell you, this is always my vision quest. After that happened, I made it a point, I got to meet him. I got to meet Dr. Zweig and talk with him one-on-one, which was really, really cool. And I told him, you're one of my heroes. You saved me. Really. And again, if you don't know who he is, Google him. Z-W-E-I-G. What a guy. Very humble. It's a shame he passed away from cancer, God, I guess 20 years ago. But Dr. Zweig helped me. So that was kind of the gist. Can I continue with that for a second, or you want to?
Yeah, absolutely. I'm a fan of Martin Zweig. His book was actually one of the first books that I read that made sense to me about the market, and it's one of the things that was a prelude to me discovering Bill O'Neill's book.
Yeah. Well, there's a great story here. So I'm working in this brokerage house in the financial district in St. Louis, and this buddy of mine, Steve, he says, hey, Pat, have you ever heard of Bill O'Neill? No. He said, you got to read this book, How to Make Money in Stocks. I said, okay, I'll go get it. I read that book, and then I called him up, and I developed a relationship with a couple people that worked there. And because of that, I had the newspaper, but I was able to go to CanSlim Level 2 and CanSlim Level 3. And they kind of got me in. And that was pretty neat. And I got in for free. And I was unable to maneuver around. And that's where, I got to talk to Bill O'Neill. I went up and just started talking to him. I got to talk to Bill O'Neill. I talked to David Ryan, just one-on-one. And Bill O'Neill, I remember one time he's sitting at the table and he's just sitting there eating. I thought, what the heck? I'm going to go sit down and talk to him. What are they going to do? Kick me out? So what? So I'll take a shot. So I just got to sit down and talk with Bill. And it was great. Just listening to the man, asking questions. And I'll share this with all of you. He's one of my heroes. I will tell you, that man changed my life. His book, his charts, his newspaper. And I'm going to stop right now and tell you all, I don't work for them. I don't get anything from them. I get no discounts. I get no rebates. I pay retail for everything, but great product. Great product, great knowledge, and great product. And then I became an IBD meetup co-leader for 12 years. So I taught, and I still do, I teach the investing. I take it to a different level, a far different level than what they're doing. And I'm not knocking it, but different tactics on money management, on how to get in, how to manage your stock, and how to get out. Oh, and I'm going to pause right here and tell y'all, I don't day trade. Okay. I don't look at 5-minute charts. I've probably looked at one 5-minute chart this year.
Okay.
I probably looked at 5-minute charts the last 2 years. I don't do that. Anyway, I'm a big follower. We take it to a different level with our chart pattern recognition. and it works. It really helps us fine tune entry points for getting into stocks. And we're always looking for great stocks. I mean, I'm very stringent. I'll tell you this. I've had people through the years tell me, I couldn't work with you because you're wired so tight about this. And there's a reason why. And there's two reasons why. When I was 29 years old, my dad died. And he owned a business in St. Louis. And my mom owned the business and she sold it. And she gave me the proceeds to invest. And I realized she's a widow and I can't lose her money. And so I realized then I really needed to get serious about this. I mean, really serious. And so that's from my heart. That's a fact. I can't lose my mom's money. My dad was dead. And then I got married and the Lord blessed me with 4 kids. And for years, I was the sole provider for a family of 6. And I was a broker. I was an investments advisor. I managed money for people with Fidelity Select funds and did really well for years. But I started, and I'm thankful for this, I started making more money from our investing account than I did from commissions and fees. And so I finally got out of the business. And I got out of the business in 1998, 99. I was out. I was done. I got out and I became a private investor. And I'm not bragging. I'm grateful for this. But we have lived, you know, when you're feeding 6 people and you got 4 kids in private schools, you got to freaking make money. And I thank the Lord I was able to support a family of 6 as a sole provider for a long time. And again, I didn't have any money. My dad was dead. And so I had to get serious about it. So that's kind of, I'm thankful. I'll just tell you, I'm thankful and humbled. I just want to lay that out there, okay? I'm not bragging here, okay? Just
No, like that's super important, and having such a strong and powerful why is a driving force.
yeah.
How let me ask you this, because this is something that I focus on daily, multiple times a day. How often do you reinforce what's driving you forward? Right? Like, is that something that you focus on like every day? Is that something like every once in a while? Is it like multiple times a day? Like, how often do you remember your reason why?
That's a great question. There's a good quote. He who has a why to live for can bear almost any how. He who has a why to live for can bear almost. I've got all these quotes stuck in my head. That's why I've lost my hair, okay? Just got to tell you.
I'm on my
strange
way.
thing. It's a, friends go, give me a quote on this, and it's stuck up there, so I got all these quotes. But yeah, my why was my family. And again, we were living off our investing profits, and that was it. And my wife stayed at home and raised those 4 kids. And I am grateful for her. I am grateful for that woman. And so that was my why. And now they're all gone. And I've got 3 grandkids. How about that? Hey, Lord, thank you. And so what am I after? I still love the challenge of it. Yeah, money, sure. But I love the challenge. This is a neat game. For those of you that are listening right now, this is a very neat business. I hate to, game sounds flippant. This is a very interesting business, and that your success is measured every night. The number doesn't lie. You can think, oh, I did a good job. The number doesn't lie. It's staring you in the face. And so, again, getting really stringent, looking for what works. And I went on the Vision Quest. I'm reading Investors Daily. I go to Handsome Level 3. In fact, years ago, I actually met Mike Webster in Chicago. So, and it was crazy because, man, he had on the suit and everything. He had on the 3-piece suit and all that stuff. He's different now, which is all right with me. He's a rocker. So anyway, that's where it helped me grow. And then I kept refining. And you could say, Patrick, how did you refine it? Studying charts. For those of you who don't remember, Daily Graphs used to have, before the internet, Daily Graphs came out with chart books. Every weekend, I would pay extra to get the green book and the blue book. And I don't know if you remember those or not, Michael, the New York book and the NASDAQ, OTC book and Amex book. And you know, you want an education, you go through the chart books. And pretty soon after you look at 2,000 charts, 2,500 charts every Sunday, you get a pretty good idea what to look for in the charts, because there was no screening.
Mm-hmm.
There was no MarketSmith. There were no other programs. It was just, you got to go through the charts manually. But it was a great study. So this is my suggestion for all of you. If you want to get better, this is a great tactic. This is what we teach. Look at past great winners. Study the charts. You mind if I run with this for a minute?
Yeah, go for it, man.
Okay. I taught on the university level, okay? And it's not because I'm so smart. That's not my point. I have a passion for teaching. That's what we do all the time at Mission Winners. I want to help people, all right? And I was wired really tight, because I'll tell you what, when I was teaching out at Oregon, my final was 24 pages typed. And it wasn't because I was a jerk. It's just that I had high expectations. So here's my challenge to you. If you want to get better, take the time to study charts of past winners. Study the charts closely. Oh, that was easy. That's easy to do. That's easy to do. No, really analyze the charts. One of the things I love to do, look at the daily charts, the weekly charts. Look at the open, the high, the low, the close, and look at the volume. You can look at a chart and say, here's a price bar right here. And it's like, oh, it's a green bar because the close was higher than the day before. But if the stock opened here and closed here on increasing volume, that's not a good bar. So I encourage you to learn to study the charts, the open, the high, the low, the close, and volume on every chart. And you will have a better understanding on supply, demand, strength, weakness, more than other people do. And that's what we teach, what we do. And then you combine it with volume, and you turn off the noise. I'm going to be very honest. I don't even have cable TV in my office. I don't watch any of it. I also don't really listen to a bunch of different people, and that's no offense to anybody, but I find bias enters into your thought processes. And when bias enters into your thought processes, you start looking for something. And when you start looking for it, you start screening out things that don't fit your preconceived notions, and you miss opportunities. So you know what I do? I turn off all the noise and I let the charts talk. That's it. Open, high, low, close, volume, and trends. Trends pay. I'm going to run with this a little further for you. And I know you can say, man, you're like drinking from a fire hose.
A little bit, but I love it.
I haven't had any caffeine yet for like 3 freaking hours. No. I remember once I'm working with a youth group at the church, and they go, hey, Pat, you ever have a Red Bull? There you go, rock and roll. He said, you ever have a Red Bull? I said, look at me. If I had a Red Bull, I'd explode. No, I don't ever touch any of that stuff. But I do have tea. Check it out. Tea.
Oh, very nice.
Rawa Miners. There you go, S&T. So turn off the noise. Focus specifically on the charts. And I stratify it too. And this is important for you.
Okay.
I'm going to share some facts for you. These are not opinions. Leading groups produce leading stocks. Now, Bill O'Neill and company has done a tremendous amount of research that's quantifiable. It's kind of my background too, okay? I was a research guy when I was in college. I was a research guy when I was teaching. I'm going to give you some facts. Most, not all, but I'll give you a number. Research indicates about 86 to 87% of all stocks that make great moves. I don't mean stocks, oh, I went up 10% in a quarter. I don't give a rip about that, okay? I want to make money, and I don't day trade either, as I said. 86 to 87% of all stocks that have made great moves have earnings up 40% or higher in the quarter before it goes up in price. Folks, if I told you that you can go and about 9 out of 10 times following these constraints, you can make money in a good market, would you go for that? You've got a statistical edge. That's something you bank on. 87% of all great stocks have sales up on average 40% or higher for 2 quarters. Now you have some quantifiable information that we use.
Yeah.
Focus on stocks. I'm going to give you a recipe for a great cake. Can I do that?
Yeah, no, let's hear it, man. I love cake.
Okay, what chocolate? Should we have chocolate? I got ice cream. Okay, so
There you go.
here we go. 2 screens for you. And I teach this every day, 2 screens. Focus on stocks in your screening system, whatever you use, that last quarter's earnings were up 40% or higher. Focus on stocks that are above the 50-day moving average line. Focus on stocks that are within 20% of 52-week highs. Focus on stocks that are over $10 a share. Focus on stocks that have an accumulation distribution of either A or B.
Okay.
If you take those constraints, you will find winners. And now I'm going to flip it and say, take out the earnings component and use all those constraints I gave you and focus on stocks that on average, the average sales for the last 2 quarters were up 40% or higher. I'm laying the cards on the table. There's a recipe for a great cake, folks. I'm not kidding. Focus on stocks in the top 40 industry groups. And again, an accumulation distribution of A or B. You study those charts, you will find winners. I'd say 95+% of all the stocks that I've done the last 2.5 years have those constraints. And you can say, oh, come on, I can document it if you want. I mean, we won't do it today, but I can pull them out, all right? Just Beyond Meat. Take a look at Beyond Meat. Take a look at Tesla, TSLA. You can say, wait a minute, 600 points in 4 months? And I'm not bragging. By the way, there's another great quote. Don't equate brains with a bull market, okay? You know, just get in line with it is. And then I'm going to share one last quote before I get to the next one. And I had this quote taped to my monitor. Look, there we are.
Yeah,
oh, is that sweet potato pie? That was a nice move.
Yeah.
That was
that one heck of a move there. And for Beyond too.
Yeah, Beyond Meat.
Back before this. Yeah,
right there. If you pull it up on the daily, I can show you exactly where I bought that beast. And again, great numbers. Thanks for doing that, Michael. You're sweet.
Yeah, absolutely.
Right? Okay. There we go. There we go.
Like
right
somewhere
here.
right around here, right?
Here. Well, no, here's what I was looking for. And it was very simple. It was a new issue. It had great, I do believe it had great revenue growth. I don't think it had both great earnings and sales. I'd have to go back and look. But it's a new issue. You see the first day that it came out, it runs up and it closes strong. Now let's do something here.
All right.
You can advance it. That day it closed strong. The next day it closed near its lows. The next day it falls and reverses and closes near its highs. You see that day, folks? Folks, look at the volume on that day. Okay? Low. But then the next day it spikes up on a pickup in volume. Now, look at the next 3 days. It drops 1, 2, 3. I'll ask you folks, tell me about the volume on those days. What did it do every day? This is what we teach. Every day it pulled back on decreasing volume. Decreasing volume. What does that tell you? The selling's drying up. And then it turns and starts to curve back up. Oh, I'll keep going to your left a little bit. Keep going, way, keep going, right? Okay, there's the bottom, that part. It starts to curl up that day. The next day, it starts to pick up in volume, and we bought some on that day. And what do you have there, folks? It's simple. You have a higher low on the daily chart. And then that sucker just marched and marched and marched. And those are, what moving averages do you have there, Michael? What do you got?
I have the 5 EMA. That's the thin gray one.
Got it?
Green is a 10 EMA. The purple is a 21 EMA, and the red is a 50 SMA.
Sweet potato. I like it. Folks, let the stock ride the trend. Don't overthink it. There's another good quote for you. You'll never go broke taking a profit. That's a lie. Now, somebody listening right now say, what a jerk. No, that's Pat, you're arrogant. No, if your losses are bigger than your gains, you're going to go broke. So what's the moral of the story? Let the stock work for you as long as humanly possible. If you study that trend, you can see it walked up the green line and then it lost the green line. By the way, as it's going up, what do? You sell a little bit into strength, but you don't sell all of it. After you have a good cushion, you can give it to the 20-day, you can give it to the 50-day. What's the purple line on there? Is that the 20 or the 50?
And The purple line is the 21, and
Perfect.
that's a real interesting point that you made too. That you can't go broke taking a profit, but you also quantified it in saying to start to sell just a little bit into strength too. So can we dig a little bit deeper into that?
You bet. You bet. And that's a good question. You should do this for a living, Mike. I like that. Is that pretty good? He didn't pay me to say that. Don't worry. I have a degree in psychology also. And so the biggest part of this game, I say this quote a lot, and maybe you think it's corny, but it's the truth. The biggest part of this game is not what's before your eyes, it's what's between your ears.
Oh, I love that.
Here can make you or break you. Work, strive for a still pool, calm in what you're doing. If you micromanage it and look at shorter time frames, there's too much emotion in them, in those shorter time frames. Bigger money is made with a trend. But you can see that one topping bar going back. Does my cursor show up if I do that?
You should be able to annotate. So like if you scroll your mouse down to the bottom, you might have some annotation options. Do you see that?
Let's see here. No, well, can we just do that? You see this about 20 days into the pattern. You see that one big topping bar? Big, right there.
Here?
That's it. Yeah. Okay. So what are we doing there, folks? If you have the open, high, low close on that bar, I do believe it gapped up big, and then it reverses and it drops down. On that emotional bar, we sold some into strength, but not all of it. The trend is still up. But by selling some, you've relieved pressure. We talk about psychology. By selling some, you relieve that emotional pressure that, my God, it might drop and I'm going to miss my whole gain. No, you've sold some. You've guaranteed yourself a profit. That stock, think about this, folks. If you sell off 20%, that stock can drop all the way back down on your remaining shares to your purchase price. And guess what? You still made money. Is that sweet? But by so doing, it relieves that psychological pressure and it allows you to let shares ride much, much longer. It's what we did with Beyond Meat. It's what we did with IIPR. It's what we did with Tesla. We just let it ride. Sell a little bit and let it ride. Let it work as long as humanly possible. When it starts losing moving, after you have a large cushion, don't sell it when it loses the 8-day. Sell some if it loses the 20-day, or even get it down to the 50-day, and it works. By the way, I'll share something else really cool with you. You'll like this. You have the 10-period exponential moving average on there?
Yeah.
Does anybody know about the 5-period exponential moving average? Here's a challenge for you. Anybody? This is kind of a cool story. Why did the 5 become so prevalent? Because of a man named Ed Seykota. And if you don't know who Ed Seykota is, read about Ed Seykota. Seykota. Ed used the 5-period exponential moving average, but he was trading commodities. But read about his returns. And I'm a schmoozer. I had a chance to meet him and talk with him too, one-on-one. I maneuvered myself into it. The guy's amazing. Yeah, Ed Seykota. And which leads to another point for you. My goal here is to help people. We're here for a short time. If we can't help people, then what's the use of being here? Here's another quote for you. Be ashamed to die until you've done something that would improve the quality of life for humankind. Do things, do good things, not for yourself, but for other people. I can't stress that enough. So here's another good book for you. Market Wizards by Jack Schwager. That I know you, Michael. I bet my life on it. You've read that.
One of my favorites.
Yeah, it's a great book.
And it's great on Audible too.
There you go. There you go. Sweet. But I have to share this with you. The interviews with the traders are wonderful. The Ed Seykota interview is wonderful. I mean, wonderful. He has a quote in there, and I do believe it goes like this. Something about when investing, limit losses, limit losses, limit losses. If you do that, maybe you'll have a chance. I'm paraphrasing, but that's it. But one of the best parts of the book is the last chapter, Psychology, Dr. Van Tharp. Remember that?
Yes.
Dr. Van Tharp.
One of my favorites.
Yeah, read that. I encourage all of you, read that. It'll give you knowledge that's transferable to power. A good quote, and I know you can say, you got a lot of quotes. This is very relevant. If you're listening to this, chances are you're a trader or investor. I love this thought. Only the still pool reflects the stars. Only the still pool reflects the stars. If you've got jumbled up stuff going on around in your life, it's going to be harder to make decisions, to make good decisions. Strive for methods that provide tranquility for you. If you have that, you will make better investing decisions. And if you can learn to ride trends as long as humanly possible, you'll do better. Read Dr. Van Tharp in Market Wizards. He's the last chapter in the book. He's got great tactics addressing trader psychology. I'm sure you remember it too, right? Like, you know.
Oh, I'm a big fan of Van.
Yeah, it's just great stuff. I mean, handling, interviewing people that constantly, I'm too impatient with the markets. Don't be. Change that mindset, and all of a sudden, progress starts happening. Here's how you know you've arrived: when you can have a stock and you don't even have it on your front page anymore. You don't even look at it. Now, you've got a limit alert set, okay, or a sell stop, but you move it to your second page. Let it work for you. After it's pushed away in price, just let it go. And more money is made by not touching your keyboard than by touching your keyboard. And you're also listening to somebody who tried the day trading and all that. If it works for you, good. You found what works for you. But I'm going to tell you something that used to make me mad. I'll keep it clean, okay? Pretty good? Nothing would tick me off more than buy a stock and have a wiggle on a frickin' 5-minute chart and panic out and sell it, and then it turns and goes back up, and I never get back in it. Then it just keeps marching, and I never get in it again. And I'll never forget, I had a trading partner, Henry, who was one sharp mind. I mean, that guy's sharp. He calls me up one day on the phone. He goes, Patrick, I'm going to tell you something. He talks like that. He's the most lethal man I know. Okay, and I mean literally lethal. He says to me, if he's listening, he knows. He goes, yeah, he is. He goes, Patrick, I've learned something. If I had never looked at a 5-minute chart, I'd have a lot more money. So there you go. Now, I'm going to pause here and say this. If it works for you, fine. Go for it. But I found, for me, bigger money is made in letting a stock trend as long as I can. Whether it be Tesla, Alibaba was really good, Apple, Microsoft, these were good moves for us. Good moves. GSX, Go Sam X-Ray, we got out for almost a triple. And I'm not bragging, but if you can you punch that up by chance, Michael?
Oh yeah, that's on my radar right now.
You're good, buddy. I'm telling you, you should do this for a living, Michael. I'm not kidding. It's nice to meet you, by the way, good buddy. We've talked on the phone, but this is good.
Yeah, this is what I'm seeing right now, actually. Popped up on the radar again, and for me, this actually triggered a small entry.
Yeah. Do you have a chart up by chance?
Yeah. Oh, I'm sorry. I thought I was still sharing my screen. Let me come on.
But you look good there, man. You're good too. You're not as good as a breakout. You're not as good as a long base breakout, but you're all right. There you go.
Here we go. Yeah, well, I was seeing this as a high type flag, and that today's up above this little area of resistance, I took that as an entry, and I just took it as a tiny entry because the market is still very squirrely. Like we're starting to emerge potentially, but we'll see if this is a rally in a bear market or if there's another, who knows?
It's
Who
it.
knows? Let one trade work, and if another one if this works, then add on another one.
Amen. Let it go. We picked it. You see that first green line down lower? You see that volume surge coming into it way back here to the left? Keep going, way back. Keep going. Right there.
Right there.
That's
the
it.
first
Right there. That day we bought some, and the next day we bought more, triggering through there. And folks, we talked about trends. Look at the thing trend. It walked up the moving averages. We just let it go. By the way, quantify it. The quarter before, the earnings, the quarter before this stock broke up, was up over 300%. I can live with that.
Yeah.
There you go. So quantifiable, that's what we do. That's what we do. And I turn off the noise. I get MarketSmith. I'm going to tell you that. That's my screening tool. By the way, I'm going to pause. I don't get anything from MarketSmith. I don't get any discounts or kickbacks or any finder's fees. Nothing like that. But I was in the beta test group for the original Daily Graphs Online product. And I love their screening capability. But if you have something that works for you, good for you. Good for you. I've just found something that works for me. And I run my screens. I have about 9 different screens that I've developed over 20 years. And I run them. I put them all together in one master list. And what do I do with it? Well, folks, I just gave you constraints. I sort it first by industry group rank. So all the stocks are together by industry group rank. All the stocks are clustered together that are in the same industry group. How do I sort it second? Percent off high. So if group number 1, the stock that's closest to 52-week highs comes up first. The one that's next closest comes up second. And it works like a champ. I love it. And then I just click those and I hit my space bar and I look at the charts and I look for a pattern that I look for chart patterns, pretty simple. By the way, you can say, oh, are you just a cup and a handle guy? Heck no. If you wait for the cup and a handle, you're going to starve to death. You need to find several other patterns that make sense where you can make money and master those and look for price and volume. People talk with their mouths and vote with their pocketbooks. How do they vote? It's shown in the stock. It's shown in the volume. And I look for it. And it works great. It works great. So anyway, fire away. What else would you like to know? Who does my hair? Nobody.
Oh, man. I want to open it up to questions from the audience, too. We've been going strong now for 40 minutes, and people have been waiting patiently. We got one from Andrew. He asks, do you buy in tranches as well as sell piece by piece, or do you take a full position right away?
That is a great question, Andy. I buy, and I'm big on this approach from Bill O'Neill. Okay. And again, I'm very grateful that I met that man. All right. I start just like him with a 50% position. And then I add, as it progresses up in price, 3 to 5%, I add another 30%. And then if it goes up another 2 to 3%, I add another 20%. So let's suppose your goal is to get to 100 shares. I quantify things. My goal is to get to 100 shares. You start with 50, and then you buy 30, and then you buy 20, which gives you the 100 shares. If it doesn't go up in price, you only have the 50 shares, which does one thing for you that's very important. It keeps your losses smaller and it minimizes risk. Another very important point. I only do that tactic, and it is a great tactic. I only do that tactic when the markets are good. When the markets are bad, I scale back even more. Like I said, one of my degrees is in psychology. And so it's really big what's happening between your ears that can make you or break you. We've got to protect our financial capital, and we have to protect our emotional capital. And one of the ways to do that is have the discipline. When things aren't good, don't do anything. Sit tight. Go ride a bike. Okay, some of you listening right now know me. Go for a freaking bike ride. Go swimming. Go to the track and do the stairs. All right? Get away. Do other things. You will find it is far easier to make money when the wind is at your back. So why not wait for it? Have the discipline to wait for it, and you'll do much better with less stress. I know I say that a lot, but I can't stress it enough. If you have turmoil going on and you're freaking out over your stocks, you're doing something wrong. What was the book? Reminiscences of a Stock Operator. Remember that book? Jesse Livermore?
A classic.
Oh, yeah. Jesse Livermore. I'll tell you another good book is How I Made $2 Million in the Stock Market by Nicholas Darvis. Great book.
Oh, man, you're quoting all my heroes.
Isn't it great? Now, here's a crazy story here, okay? Then we'll get back to it, to managing risk. Well, no, I'll say this. Then remind me about Nicholas Darvis. In fact, I'll write it down because God knows I'll forget. I'm telling you. I got a lot swimming up there. Manage your risk. If the pattern isn't great, do less shares. If the market's rough, do less shares, okay? A lot of people think about, how much can I make? How much can I make? That's nice, but also think about, what might I lose if I'm wrong? Always have a plan to get in. And by default, if you have a clean and simple entry on a chart pattern, here's the chart, just a long base. Isn't that nice? It's good above this point. It's bad below this point. When markets are whippy like they have been, we have a couple of choices. You could A, not do it and wait till clear skies come, or B, do less shares. And there's nothing wrong with that. Also, for newer investors, I want to share this with you, and this is important. You want to protect your capital, financial and emotional. When you're first starting, go easy. Say, I'm going to make a killing. By God, he showed me that GSX. I'm going to buy the next, I'm going to go for it. Go easy. Master it first. Remember when you first learned how to ride a bicycle? Mm-hmm. You know, and you're time, oh, I think I got this. By God, I'm going to go on a 30-mile bike ride. What are you, nuts? No, you go easy. You want to be here for the long run, So here we go. Nicholas Darvis, talking to a good buddy of mine I traded with named Billy out west. We're talking, and I said, you know what? Now I'm going back 30 years, okay, folks? I'm going all the way back to the 80s, 90s. So we're talking, and we're talking about Nicholas Darvis. I said, you know what we're going to do? We're going to call him up. Now, folks, again, this is before the internet. We didn't know if he was freaking alive or not. So we tried to, we're going trying to get hold of him. We maneuvered. Come to find out he's dead, okay? But we got to talk to his publicist. So that was kind of crazy. That's a good book, by the way, too. Just a good book. Turning off the noise. Hit me. Okay, we got more questions. Rock and roll, buddy.
Yep. A lot of questions are coming in. I'm curious to hear those. So we've read a lot of similar things so far. I'm curious to hear a little bit about what are you continuing to learn new things about trading now? And if you are, what sources you're looking at, and what are some of the newer things that you're looking at?
That's a good question. The only thing that I've learned and relearned is the importance of patience.
Okay.
And that's stuff that you can't learn from a book. It's like you can read every book on how to ride a bicycle. Eventually, you got to get on the bike. Get on the bike doing this, folks. Don't crash. Don't destroy yourself physically or financially or emotionally. Go small and build proficiency. Build on your success. If all of a sudden you start losing, chipping, it means one of two things. Either your tactics are wrong, or you're not in the right market for investing. The markets talk every day. And this sounds cliche, but they really do. Price and volume talks every day. All you got to do is listen to it. It'll tell you what to do. If a stock closes, here's a price bar, okay? Here's a price bar. And this is the high, and that's the low. If it closes here, is that good? Yeah. If it closes here, is that bad? Yeah. Now, if it closes here on really low volume, see, now we're going to combine things for you, folks. If it closes up here, but on really low volume, is that good? It's okay. You like volume. If it closes down here on really low volume. Is that bad? Not as bad. Combine those two variables together, price and volume combined with open, high, low, close. And by the way, I don't use candlestick charts. I just use regular price bars, but I color code them, okay? But if you start taking that tactic, you'll be light years ahead of the competition. A lot of people don't really teach that. We teach that. It's important to pick up the nuances of it. I'll say it again, open, high, low, close, and volume. And there's one other thing I encourage you to do. Color code your price and volume bars. A green bar, for me, a green bar is a good bar. And a red bar is a bad bar.
Right.
But when you combine it with volume and the open, high, low, close, you could say to yourself, I have an understanding now where it looks like a bad bar. Here, I'm going to give you an example. Here's a chart.
Right.
Right? This is a price bar. Can everybody see this clearly? Is it coming across clearly, Michael?
Yeah, I could see it. Can everybody else see it? Just you're holding up your hand like this.
Yeah, you got it, brother. All right, we can do this. How about this? Is that better?
All right.
How about this?
That works.
Okay. Here's the price bar. Hope I don't dial somebody. Wouldn't that be embarrassing if I call somebody? Hey, Dad, how you doing? Hey, I'm busy now. Get off the phone, dagnabbit. Okay. So here's the price bar. All right. If it opens up here, okay, that's where it opens, and it closes down here. I'm going to do this for you. Watch this, by God. Look at that. I don't know if we can do this or not. Opens up here, closes down here. That's a bad bar, okay? If it opens up here and it closes up here, that's a good bar. You can also have an equilibrium bar, all right? If you combine that fact, and people say that's really simple, most people never really think about it, okay? If it opens right at the highs, but also closes right at the highs, that's all right. If it opens here and closes here, but it does it on low volume, that's not that bad of a bar. But if it does it on really heavy volume, it indicates more institutional selling. And people say, that sounds really elaborate. It's really not. You can look at these things and pick it up instantly. And the last thing I'll suggest is do this. Color code your price and volume bars. Up bar is green for price and volume. Red bar is bad, okay, for price and volume. And you will instantly start picking out quickly the hidden buying and selling pressures in a chart. And folks, I'm going to tell you something. We teach this all the time in Mission Winners. This ain't rocket science. This is simple stuff. But all of a sudden, I start getting messages from VIPs. Hey, I get it. Man, I'm seeing things. I'm seeing things I didn't see before. That knowledge sets you apart from other people who don't know it. Anyway.
Interesting.
Buddy,
so,
I'm all here for you.
So if we pull up like this chart back here again for GSX, so like this bar here would be color-coded something else because the volume is way up the charts and it's closing at the top of the range.
Right? It's green.
Like
for me, it's green.
So like right here, like we have just orange and gray bars. That one would be green. And
that one's green.
That would be green too. But even though the volume is like it's above average, that's what's making it be green.
Actually, the color, that's a great question. The function of the bar, the price bar itself, I'm going to be very specific here. The function of the price bar, whether it's green or red, is a function of the close and the open. If it closes below where it opened, it will be a red bar. The function of volume is not part of that equation. Okay. But let's think about this. If a stock opens up here, okay, here, we'll do this again. If a stock opens up here, all right, and it closes basically at the same price, all right, if it does it on heavy volume, I'll ask you, it didn't make any price progress. Volume was really heavy and it didn't go anywhere. It opened and closed basically at about the same price. I want you all to think about that for a minute. Heavy volume with no upside progress. There was some churning there. There is a tug of war between buyers and sellers, a big tug of war because there was a lot of volume. What does that tell me? I need to watch it. I want to make sure that the sellers don't overcome the buyers and it starts to drop in price the next day or two. Do I need to do anything that day? No, but it's just a red warning flag saying I need to watch it. I just need to watch it and see how it acts. That's just a really great tactic to understand the charts. And again, because I like how your charts are color coded too, mine are green. Green price and volume bars are up. Red price and volume bars are down. Now, could you have a stock? I'm looking at this right now, Michael. Can we do something here, buddy?
Sure.
Go way over here to the right. And let's take a look at, that's good, that's perfect. Let's take a look at this bar. Can you go about 10 bars to your left? Keep going, keep going. I'll tell you when to stop. Keep going, keep going, keep going, keep going. One more, two more, there. Okay, let's look at that bar. If it closes up, what would you like? You would like really good volume. If volume wasn't heavy, would you still stay with it? Well, yeah. But it's telling you, again, remember this, folks, each price bar and combined with volume is literally showing you, graphically showing you buying demand or selling demand or equilibrium between buyers and sellers. Remember that. Every bar shows that. That bar that Michael is kind enough to have highlighted, if it closed up there and volume wasn't very heavy, you look at the chart and go, boy, that's a bit extended. I don't know. And Michael has it highlighted. I see. Look at the volume on that bar. How was it, folks? It was low. Right there. Look at the volume on that bar. It's not that heavy. It was extended in price. What does it do for a couple days? Look at the next bar. Look at the volume come into that sucker. Folks, you think we're the only people in the world that look at price and volume? No, you combine those things together. People saw it and said, that sucker's a little extended in price and there ain't no buying pressure on it. Dag nabbit Ethel, I'm going to sell some. And they do. And that's it. And it drops for a couple of days. So it drops on heavy volume. The next day, now let's look at that day. Michael, thank you. By the way, I have to compliment you. You're spot on where you're putting your cursor. That makes it easy.
Oh, thank you.
No, this is good, buddy. This is awesome. Now, folks, this is a great lesson. This is the real world. We owned this, okay? That bar right there, I want you to take a look at it. What did it do on that bar? It dropped down and it closed in the top half of its range on a pickup in volume. See the volume on that bar versus the previous bar? But more importantly, where did it stop going down? What moving averages you got it there? Is that the 20?
The 21.
Thank you. 21. I use the 20, 20, 21. Look where it stops, folks. It stops. Everybody knows about these moving averages. It found support there. Okay, now go to the next bar, advance it, and it starts to lift up. And people say, man, I got to buy. This is it. It's bouncing off the 20, 21 day. I got to pick it up. This is it. How's the volume on that bar?
Yeah, kind of
sloppy.
Mediocre.
Nothing.
Yeah.
Was it less than the down bar the day before or the previous bar? Yeah. Okay. Now advance it one more bar. People say, oh God, look at this. It gaps down and it closes below that moving average. This is the end of the world. We got to sell everything. How's the volume on that bar?
Yeah, low.
It was low. It was low. You locked some in 4 days before, 5 days before, when it was extended. You can support, you have support here. You can weather this pullback. Volume is not heavy versus the up bars. And folks, what's it do the next day? It gaps up. There's so much pent up demand, it gaps up. And look at the volume. Is that sweet? People talk with their mouths and vote with their pocketbooks. Everybody saw it supporting on that moving average. There was no selling pressure. Boom, off she goes on volume. Look at the next day. More volume. I got to get in it, Ethel. Let's go. Let's go. Now, advance it one more bar. Thanks for doing that, Michael. I appreciate it, buddy. Look at this bar. What's that bar, Carl? It's an inside day, just an inside day, right? The range on that bar is inside the previous bar. What's the next day? An inside day, equilibrium. By the way, look at the low volume on that bar. And then the next day, what's it do? It comes down to the moving average and it bounces off the moving average again. Look at that. Is that nice? A pickup in volume. Now, let's look at the next day. Look at that. It closes on an inside bar on slight heavier volume. What does that indicate? Increasing selling pressure, but it's still above the moving averages. Next day, we can continue on. Finally, it loses the 20-day moving average, whatever, and you sell a little bit more. You try to let it ride as long as humanly possible, and it works like a champ. If you walk away from one thing today, let it be this. I'll say it again. By the way, this stock had earnings up over 300% before we bought it.
Yep.
Okay? I can build the case. That's why I've lost my hair. Here we go. It's bad, ain't it? Go in there and focus on companies. I'll say this again for all of you. Focus on companies that last quarter's earnings were up 40% or higher. Focus on companies. Now make that one screen, by the way. Okay? I'm going to share a great tactic with you. I've got about 10 screens on MarketSmith that I've developed. One of them. Last quarter's
Get your
earnings.
pens and papers out, people.
Here we go. Let's go. Last quarter's earnings up 40% or higher. All right? And all the other constraints. In fact, let's rattle it off. What do you say?
All right.
I'm going to write it down. Here we go. Price. We'll just take it from the top. Say price over 10 bucks. I like it a little higher, but we'll say $10. Volume over 200,000 shares a day. Accumulation distribution, I really prefer A or B. Top 30, top 40 groups. We'll say top 30, okay? Top 30 groups. It's over the 50-day moving average line. Okay?
All right.
I'm going to round that up to the top 40 groups instead of top 30. Say top 40 groups. I'll make it easier for you. Top 40 groups. I'm going to take it again from the top. Over 10 bucks a share. Does more than 200,000 shares a day. Accumulation distribution, A or B. It's in the top 40 groups. It's over the 50-day moving average line. It's within 15% of 52-week highs. Right there, folks, is a recipe for big money. And if you want to challenge me, go ahead, and I won't do it this moment. I'll rattle off 20 stocks that fit that criteria that kicked butt. Okay? That's a fact. Now, take those constraints. I'll say them again. $10 a share or higher. 200,000 shares a day. Accumulation distribution of A or B. In the top 40 groups. It's over the 50-day. It's within 15% of 52-week highs. Change one variable. Instead of 40% earnings, which we put on this screen, keep all the components the same, change one variable. Average sales for the last 2 quarters of 40% or higher. And again, I was in the beta test group for the original product. We maneuver around in that animal. I freaking love MarketSmith, and I don't get squat from them. Okay, I think I should, but that's a different story. Anyway, this works like a champ. It works like a champ. And turn off the noise. I might miss something. Again, my background was in statistics. I want to stack the deck in my favor as best as I can. All right? Can't stress that enough. Be careful with the numbers, though, okay? Make sure the numbers were real. Oh, last point we're going to make here. Little caveat for you. Please be careful with biotechnology stocks, okay? They're great, and they can go up like the rocket's red glare, and if any news comes out, you're going to get killed. So always ask yourself if the risk worth the reward, and you can say to yourself, you know what? Hey, if I do biotechnology, I'm going to be careful. Now, if you want to go for it, that's fine, all right? If other people do it, that's fine, all right? But just know, because I had a friend, he got his He got kicked. We'll keep it clean. He got hit hard on a biotechnology stock about 12 years ago. I mean, he got creamed to the tune of, I think, between 50 and 60,000 bucks, and he didn't have that many shares. He goes, Patrick, I'm never doing another biotechnology stock the rest of my life. And so there's a lot of money to be made there. If you want to do it, though, that's fine. If other people do it, that's fine. I'm not going to cast any stones, but just be a good steward of what the Lord gave you. Be a good, manage it. So what other questions we got, buddy? I'm ready for you.
We've got loads of questions. I want to be respectful of your time too, because it's already 5 o'clock.
Oh,
so
well, how about this? We'll hit them hard. The only thing I have to do is check in with my parole officer, and I'm done. Just kidding. You know me, Mike. Crazy. Go for it. We can do some. Don't worry, I don't have to go to my barber, so we're all right.
This one is from Virginia. How do you set your original stop? How do you optimize reward to risk?
Great question. That's a profound question, because risk and reward is so crucial. I'm wired tight. I'll keep it clean. I'm wired tight. I'm always looking for really, really clean and simple entry patterns. I want a flat base. Doesn't need to be a cup and handle, but a really flat base where it's been consolidating for a week or two, if not longer, at 35 bucks a share. Tight range, tight closes, really tight. And it breaks above 35 bucks a share, and it does it on volume. If there's no volume, I'm not buying. Okay? So here it is. Good over 35, bad below 35. People say, Bill O'Neill, by the way, said this off the record about limiting losses 5 to 7%. He'd said off the record, he actually likes to keep his losses much smaller than that. That's a fact. Okay? So, and I'm serious. So if it's good above $18 or $20 or $35, whatever number you pick, if it's a really clean pattern, right when you buy it, now I'm going to give you a great tactic. All right? Look at the action on the daily chart. Take it down to an hourly chart. Look for that volume surge. Look for it. And 30-minute. If you don't, this is what we teach. If you don't see it, probably not a good breakout. And the best stocks will just explode and push away from your price, and they will do it on volume. I'll say it again. People talk with their mouths and vote with their pocketbooks. By Jove, I want them voting with me. And if they're not voting, I'm probably wrong. So it's good above this spot. So you buy it over 35 bucks. It starts to go up. If that stock falls below 35 and you're looking at like a lesser time frame, a 30-minute chart, and you're seeing volume coming into it, you're probably wrong. You're probably wrong. So what will I do? I will limit my losses. I will tell you this. I really, really hate taking more than a 2 to 3% loss. I run it that tight because through the years, I have found the best ones. Your biggest problem is this. You can't get your enough shares because it just goes. Why? Because everybody see it. And I do stress, if you use these constraints, you'll find those stocks. You'll find them. You'll go, holy cow, this is great. This is great. Anyway, go ahead, Michael. Hit me with another question if you like.
Yeah, no, I think that's real interesting. Like the way that you're zooming down into the hourly charts and starting to see I'm curious, then are you using buy stops to place the order, or are you seeing it pop above, then you're going to check the volume, and then you're entering your orders manually based on what you're seeing in real time?
Good question. If it's a really clean pattern, I'll use a buy stop. But normally, because I'm sitting there, and again, I got 3 monitors across the desk. I'm sitting here. I can just look at it. I've got limit alerts set, okay, price alerts, and I don't really put in volume alerts, but I watch. And here's a great tactic for you. Let's suppose the pivot is 35 bucks, just for the sake of our example. I'm using round numbers, by the way. I know you could say, how about $35.20? Let's just do 35 for example. Do not put your price alert at 35 bucks. No, they could gun right through it. And by the time you put the order in, you miss it. Have your price alert set at like 34.80. Have it set a little early. Now, on a stock like a Tesla, You might have to set it, you got to get a little bit more room. Set it early, set it a point, 2 points lower than the pivot price so that you can watch it on lesser time frames to say, yeah, I'm looking at that. And yeah, oh, volume's coming into that. Look at, whoa, yeah, oh, it's picking up. And you can see it as it's approaching the pivot. You can see the power mounting in the chart on volume. Price is good. Volume's coming into it like on a 30-minute chart. You can do this. And I'm going to be really specific with you. Do it on the daily. Look at the volume on the hourly. Look at the volume on the 30-minute. Look at the volume on the 10. I don't really take stuff to 5, okay? Look for that. And I rarely look at 10, okay? Rarely look at 10. Look for that volume coming into it. Because what does it mean? Other people see what you see, and by Jove, they're going for it. And you got your order in. If it's really great, you can put your buy stop in and get filled. And you're done. Let it work. And I stress again, always limit losses. Which leads to a quote. I may have said it once, and I want to say it again. And this is for all of you. This was a quote from Dave Landry that I had taped to my computer monitor for over 20 years. And it saved me in 2008. And it's this. By the way, if you don't know about 2008, go back and look at charts in 2008. 2008 was the first time and only time I had to make calls to Texas and I had to make calls to Washington to find out what was going on to make sure the accounts were okay. It was freaking scary when they broke the buck. And if you don't know what that is, Michael Lamoth probably tell you sometime when money market funds broke the buck. So you got tactics to get in and tactics to get out. Anyway, rock and roll, Michael. Hit me with another one if you want.
All right.
Hey, we're having fun now, though, aren't we?
Yeah, man.
What are we gonna do? 6 o'clock or something like that?
I'll stay here all night. Hey, if you want to go for the record, Jim Ropel had it at about 2.5 hours.
There we go. There we go. Hey, you know what we'll do, by Joe? We're going to order in pizza. We're going to have a feast out here. Okay?
Awesome.
But
man.
remember, social distancing. Don't, slide the money under the door with the pizza guy. Okay, never mind. Go ahead. Oh, by the way, I do want to say something here on a serious note. Given part of my background, please, folks, be careful. Be very careful. And I encourage you, wash your hands. Don't rub your eyes. Don't be really careful right now. Okay. I've seen things up close and personal. Take care of yourselves. Even so much this way, when you go out and get the mail, wash your hands with warm water and soap. And you can say, good Lord, what's this have to do with stocks? Well, I'm telling you what, if you get sick, stocks ain't going to matter too much. So anyway, just wanted to share that with you.
Yeah, absolutely. From an energy standpoint too, like, well, when are you going to make your best decisions? Well, when you have a lot of energy, when you're feeling good, when you're feeling happy, or or if you're sick and lethargic.
No good. You're right. Yeah. You're right. Oh, and Michael, you hit a nerve there. If you're going through a really rough time in your life, like somebody close to you is very sick, maybe dying, and I've gone through that with different things, okay? Just pull back because it will cloud your judgment, all right? It will cloud your judgment and you won't make good decisions. So don't think that you have to do this every day. And I didn't go, man, you're going off on stupid tangents. No, that's the real world. That's the real world. Protect yourself. Protect your emotional capital. Protect your financial capital. Anyway, just wanted to share that with you.
That's the whole premise of the show, Trader's Mind Chat. That's the name of the show. So yeah,
we should
focus on the mental
side. That phrase, Michael. You should use that. Okay, go ahead. I'm sorry.
Question from Paul. What is Pat's take on the market currently? Is he waiting on a follow-through day? Well, what do you think about what we've seen right now in the market?
Good question. I liked the action today. I wish the volume had been a little heavier, but I can live with it. All right. How was the volume today on the spiders?
Well, let's pull up another chart here. Let's see. Screen number 3.
Yeah. So. Just so. Yeah. It was less than the last couple of days.
It's less than the day before.
Yeah. It's one measurement.
That's the S&P 500.
Yeah, I'm going to drag this back over to the other monitor. Okay, we'll leave it there. Can you still see me okay?
I can still see you, yeah. Or
Okay.
if you want, you could share your screen too. You should be able to click a button somewhere that says share, and then you could share your screen.
Let's
Would you
see.
like to do that?
Yeah, here we go.
All right.
Yeah, let's do it.
So
Sweet
I'll
potato
stop sharing
pie.
mine, and yeah, you could share yours.
Okay, let's see here. Which one do we want? I guess we want this one right here. Screen 1. Instant Windows. Screen 2. We'll do that. Tell me what comes up.
All right.
Thank you, Michael. Oh, this is great. Man, the joys of modern technology, folks.
There you go. I don't see anything yet, though.
Okay, let's try this one.
So you click share screen, and then you click on the screen, and then there's a little button, the blue button that says share.
Okay, let's try it and see what happens here. Here, we'll do this.
There we go. Something's happening. All right.
Spiders?
Yes.
Here we go. Tell me if it changes to the next one.
Yep, just changed. Now we're looking at the NASDAQ.
This is sweet potato pie. Here we go, folks. We are ready to roll. Here we go. I'll show you here. Spiders, lifting up. It's below the moving averages. This is the 8-day exponential moving average line, and this is the 20, okay? I use the 8 because it was a hybrid. It has to do a lot with Ed Sakota, like we talked about earlier, and the 5-day and the 10-day simple. Anyway, there's mine. This is the 200, and that's the 50. Price and volume, and you can see how I have them color-coded, all right?
Yep.
This rallied up today on decreasing volume. Would have liked heavier volume. Not the end of the world, but something to take into consideration. There's QLD up today, but on less volume, all right? But I'm going to show you something here. This is going to be great. Now we can turn it up a notch, kiddo. Watch this. Locked, cocked. Here we go. Right there. See this little channel? We're going to go back to, do you mind if I run with this for a minute?
Go for it, man. Yeah, you're on fire.
Here we go. Really. And no Red Bull either. Here we are. Look at Tesla. You see that nice little channel? See that volume pickup right there? That's what we're looking for. All we want to do is take out the top of that channel. By the way, folks, I'm going to share something with you. It's called perceptual filter. If you constantly look at charts after the fact, you'll sit there and say, well, that was easy. Well, that was easy to do. That was easy. No. Slide the chart back so you're looking at it before the stuff happens. You'll be much better for it, okay? Tesla, right here. I'm going to show you something beautiful. Starts to lift off on a pickup in volume. We pick some up, okay? Right there. Starts to pick up, decent volume. Now, see that yellow line? That's the 8-period exponential moving average line. Watch. Look at that volume. People talk with their mouths and vote with their pocketbooks. You see that bar? Look at that. See this bar? Up on heavy volume. The next bar. Is it coming across clear, by the way, Michael?
Yeah, crystal.
Oh, good. Okay. I didn't want to make I don't know if you know this, but sometimes I talk fast. Don't tell anybody. It's a secret. Okay. Look at this. Up on heavy volume, down on less volume. There's no real selling. And then what's it do the next day, folks? It goes up again on a pickup in volume. That's awesome. Look at that. Up again. Oh, you go, oh, that's the end of the world. That's the end of the world. Folks, how was the volume on this bar? It was heavy. How was the volume on this bar? It was heavy, but it was less than that bar. Stick. And look what it does the next day. It goes up but on less volume. But note the trend. Up, up. Oh, down. That's the end of the world, right? Tell me about that bar. Good bar, bad bar. I do this all the time with VIPs. Good bar, bad bar. The answer, well, it gapped up. See the opening? I'll do something for y'all too. It gapped up and it closed down, but it still closed above the previous day's lows. And it's walking up the moving average. Advance it. Oh, it drops down. Drops down to the 8 on a pickup in volume. Right here, sold a little bit off. Hey, that's a pretty freaking good gain, okay? That's 70 points right there, okay? And then it gaps down and reverses and bounces up. But because we sold some, we can weather the gap down. And it starts to lift. And it starts to go. Look at that volume. People talk with their mouths and vote with their pocketbooks. They voted. It goes up. It goes up. Look at this volume. Look at that volume. Look at, is that great? Am I doing okay here? Or I'm going too fast, Mike.
No, I think that you're doing great. I'm curious, like, do you use anything like a backstop or like I don't know if that's just a term that I made up, but like a backstop is like, you know, like how you have your initial stop loss and then as you raise it along the way, I call it a backstop.
Yeah,
Do you
yeah,
do
I'll
that
raise
at
it
all?
up. You bet. I'll continue. If I have a stop in, I'll continue raising it, but not too close. Okay. And
So at this point, I'm curious, like where would you have had your stop?
great question. Right here on this.
No, if we go back, yeah, like as it was walking its way up, like yeah, like
Oh,
where's your
good
stop at
question.
that point?
As long as it's riding up the 8 day, I will.
Yeah,
If it starts to lose the 8 day, I take a little bit off. See
but
this?
well, where's the stop?
Pardon me?
So let's say, let me get my annotation tool because like I could draw on this as well, and so that makes for a pretty good experience too. So like let's say like your original stop is down here, right? And then it starts moving up. Like let's say like we're looking at this day, right? Well,
Oh,
where's your stop loss now
great
on that
question.
day?
I want to take it a step further. Okay.
Awesome.
Right here. This is why I'm wired so tight on buying. You see that nice channel and it starts to
Yep.
pick up and
Yep.
we're buying. All right. If that stock bleeds back into this base below this moving average right here, the 8 day, okay.
Right.
And definitely if it takes out the previous bar's lows, you see this bar, you see the bar we bought.
Right.
I do
Right.
not want that stock taking out the lows of that bar. If it does, I sell a third to half my shares. You can say, really? Yeah. And I'll tell you why. And I can quantify it. The best stocks will just push away and not test you. Okay. I'm going to be really blunt. On this bar, we're buying. And we did. This is, I can document it.
Mm.
If the next bar, if it starts to go up and it takes out the lows of this bar, I'm selling at least a third or half of my shares. Why? For a very small loss. Why? Because it shouldn't do that. They just push away. They just go. And it did. And I want to show you something. Can I continue with this?
Yeah. Yeah. Go for it.
Look at this. Even right here, folks, you see that bar right there? Did that stock close below the 8 day? No.
No.
Did it close below the 8 day here?
Nope.
No. Watch. Did it close below the 8 day there? No. Is that beautiful? Did it close below the 8 day here?
Nope.
No. Did we sell some on this emotional gap up? Yeah, we did, because it tailed off. Yes, we did, and I can document it. Now, it gaps down, but what did it do here, folks? I want to point something out. If you look really closely, this stock never closed below the 8 day. This whole move. Never. Not once. I'm going to refresh something here. Hold on a second. Never. Now watch this. Comes down to the 8. All right. Comes down. Inside, gaps up to close it, but it's still above the 8. Inside bar on less volume. Gaps up, drops down, but how was the volume? It was okay, and volume was low. And then it gaps down, but then it closes up on a pickup in volume. They supported it there. Inside bar on less volume. Fine. Starts to pick up on a slight pickup in volume. Now watch this. You see this bar right here? I want you all to think about that. Charts are a reflection of investor psychology: fear, panic, complacency, greed. This bar right here. Do you think anybody bought on this bar? Think about it, folks. This bar right here, it's a green bar. Were there buyers on this bar? Huh? Yeah. You can say, well, Pat, how do you know that? How can you say that? Because the dang thing went up in price. There's more buyers than sellers, right? Is that sweet? Man, this is fun. This is better than, well, it's not as good as ice cream, but it's pretty dang good. Okay, so it does this. Do you think there were people that bought that stock up there at around 980 bucks a share?
Yep.
What do you think? 970, excuse me. Think anybody did? You're darn right it did. Why? Because that's where it went up to in price. There's buyers up there. And then it does this, and people go, holy cow, and I'm keeping it clean. They're going, holy cow, geez, I'm down 200 freaking points. God, what's going to happen? And then it starts to go up again. And they go, boy, oh boy. And this is the crazy ass thing, folks. You've all heard this phrase, quote, if I can get back to break even, I'll sell. You ever said that to yourself? Sure. Everybody has. I have. Okay. So it comes back up near the old highs. And I'm telling people we're going to be really careful right in here, folks, because we're approaching these highs. By the way, do you see the high on this bar? Remember we talked about price and volume? How's the volume on that bar? Heavy.
Yeah, extraordinary.
The next time price comes up near these old highs, how's the volume on that bar? Less. Less buying pressure. And I'm telling people we're going to take a little bit more off. Okay. And then it does this. Okay. How is the volume on this bar? Less. But we know it's come up close to these tops and we need to be careful. We need to be really careful. Inside bar on less volume. And then it gaps down on a slight pickup in volume. Not much, but a slight. Double top up here. We took a little bit more off. Drops on a pickup in volume. You see that? Down to the 20-day, but we still have some left. But you can see it looks like it's starting to lose momentum, but we've got to give it some room. We've sold some up higher. We've locked in great profits. We've got to let some work. Boom. Gone. People talk with their mouths and vote with their pocketbooks. Folks, they voted. Look at the volume. Then it does this. Okay? Volume was okay, but this pattern's gotten broken. You see these huge gaps? That's emotional selling. That's serious. There's people wanting to get out. Bounces up on less volume. This bar right here, it gaps up. This is a great lesson. It gaps up and closes in the bottom half of its range on a pickup in volume. This bar is met with selling. Who's selling up here? Think about it, folks. Who's selling? The people that bought it up here that go, God, I was getting my butt kicked. I was down 300 frickin' points. If I get up a little bit, I can sell some. People who bought it up here that say, good Lord, I was down 400 points almost, 350. I get back near my price. Inside bar, less volume. There. Dropping.
Yeah, those guys.
Yeah, there you go, buddy. Look at that. There you go. And that's why there was a, oh, I'm buy and hold. I'm going to hang on. You know, yeah, I'm an investor. Yeah, right. And you give back that kind of a gain, that doesn't flush. Bounce back now. So I'm sorry if that went a little long. Normally, I don't go that in depth, but I think in an example like that, it's important. Do I have permission to just, or no, let's answer questions.
No, I think that it's great. Like, I think, like for me personally, like as a student as well, like I'm constantly trying to learn as much as I can from everybody that I meet, and I selfishly love having this show because I get to bring on the people that I admire, that I respect, and I get to ask them questions for as long as they let me. So the depth is something that I appreciate, and I don't want to speak for everybody, but I would say that I would be very surprised if people didn't appreciate going deep and getting like a real answer versus like, you know, kind of staying on the surface.
Yeah, no,
That's
hey,
what we owned.
Yeah, we owned this. I mean, this is the real world. There was money in this. This is not like, oh, this is some kind of a hypothetical BS. Man, we're watching the dang thing. So focus on clean and simple. Can I just rattle for you a few more real quick?
Sure, go for it.
Okay, I'm just going to slide some charts in here real quick, okay, folks? If I can.
And while you're doing that too, we could look at this question from Anthony. He was asking about selling. Are you always selling just because of the one, like if it's one bar, or are you taking into account if it's holding the 8 EMA while it's you know, like it might be like selling pressure. All right, we'll exit a little bit here, but like taking into account the moving average as well as part of the sell signal.
Oh yeah, I'm watching that 8, definitely. And always also put it in context with what the market's doing. Okay. You can say, whoa, what do you mean by market? I really, okay, I'm going to tell you something. I really don't look at the Dow hardly at all. All right. It's 30 freaking stocks. Okay. I want a better measurement. So what do I look at? I look at the S&P 500 and the NASDAQ comp. That's it. And it makes it much easier for me. And also I'll make it simpler. You can use this. You're like, I don't know if I can follow this. Follow the spiders and follow the cues and look at price and volume. That'll help you. So did this other chart come up, by the way, right here, Michael? Upland?
No, I don't see anything yet. Tony said that your VIPs love the depth on Tesla.
Pardon me?
Tony was saying that your VIPs love the depth on Tesla. So,
well, thank you, Tony. Good to see you, buddy. So does another chart come into this window by chance?
And no, I just see like a big gray box.
Let me see if I click. I don't think it's going to work. Okay, we're going to take that out. Okay, I'm sorry.
Okay,
I see. Hang on. Can I adapt real quick here, kiddo?
Yeah. You could, if you stop sharing and then share another screen, that might work.
Here we go. No, you know what? I'm just going to do this real quick. We'll make it easy for us. Here we go. Another example. Microsoft, right here. Shelf. By the way, folks, this ain't bragging. That's lame. I want to educate you. That's my goal. I love the max list. I love the bigger names. I love stocks that when they break through a spot that's easy to say, okay, I say this and I hope this doesn't offend anybody, okay? I'm looking for a chart pattern that Ray Charles can see, okay? The simpler, and again, folks, if that offended you, I apologize. That's not my goal, okay, at all. That would be wrong. Just the idea. I'm looking for simple chart patterns that people can see and can act on them, like right here. Simple shelf, right there. And it walks up, starts to drop here, loses the 8-day, sell a little bit, gaps down. By selling a little bit, losing the 8-day, I can handle this. Where it's like, oh my God, it's the end of the world. It gapped down, it's over. Oh, look at how the dang thing closed that day. We talk a lot about the open, high, low, close. Look at this bar. It closes here. The next day, it opens right there. It drops and then reverses and closes right near its highs for the day on a pickup in volume. That's sweet. That's what we want. And look at that trend up the 8. Is that just nice? And look at the trend up the 20. That's what we're after. Looking for things like that. Great way to make money. I'm going to show you a couple more here because I'm like a kid with a toy here. Let's see if we can do that. Can we? I know I can find some others. Alibaba. Here we go. We're going to do another one right there. Watch this. People say, I don't see squat there, Pat. That's one ugly pattern. And you know what I said? I agree. But check this out. By the way, some people say, just look at this. Here's a great tactic for you. Tighten the chart up and look at weeklies too. Look at that. Look at that nice long cup and a handle. You can say, well, that looks pretty good. Picked it up right there. Folks, people talk with their mouths and vote with their pocketbooks. Look at the volume pickup on this bar. And then look at the next bar. They're voting. Okay, now, this is a daily. But watch this. Take it to, and I'm going to enlarge this for you, right here. Here's the weekly. Look at that. Look at that volume spike. And then a quiet bar right here. And then it closes right near its highs. And then it lifts off. Now, that wasn't huge, okay? But if I go back to the daily, entry right there, you run it on up, you've got 40 plus points on some of it. Now you're going to sell it all up here? No, it's a lie. But then it starts to drop and lose the moving averages. You take the money out and you're gone. That's what we look for, and it works.
Here's a good question.
Hit me, babe.
Let me grab my annotation tool on this one, and let's just say, like, let's say you saw this, but like you saw it on that day, like right on the close, and you're like, oh man, I missed it. Well, what would you do?
Great.
Like, do you let it go, or like you keep it on a watch list, or are you buying it some other way? Well, what do you do?
That is a great. Who asked that question?
Me.
Oh. Well, this one's for Michael, a long distance dedication from Pat to Mike. Okay, here we go. So you missed this bar. Here's what I do. And this is a great tactic. You can say, well, I'm not going to chase price here into the close. Okay, I'll wait. The next day, it opens basically unchanged, and then it drops, You see that bar right there? The low on that bar? And then what's it do, folks? It takes off, and look at the volume. Do you think, so here's Michael Lamoth, great guy. Pat Walker misses it, right? Doesn't catch it there, but he sees that breakout. Dag nap out, I'm going to watch it. The next day, you think we're the only people in the world that missed the breakout? No, we all miss breakouts. But the next day, it takes out that previous bar's highs. Look at the volume on that bar, folks. They voted. As soon as it takes out the highs of this bar, you could buy some. But now I'm going to quantify it for you. If you normally buy, and I'm going to be conservative here, if you normally buy, we'll say 50 shares. Let's just do 50, okay? If you normally buy 50 shares on a long base breakout, right here, if you bought, would you buy 50 shares? I want you to really, I'm not trying to be a smarty pants when I say that. Would you still, thank you, Michael, for drawing that. Perfect, sir, thank you.
Yep.
Would you buy, you should do these webinars, Mike. This is good. You should do these. He's not paying me to say that. Just want you to know. So, taking out the previous bar's high, it does it. Those that missed, look at the volume pickup. They bought. Look at that vote. They voted. People talk with their mouths and vote with their pocketbook. They voted. You buy it right there. Taking out the high of this bar, and here's what you do, folks. I'm going to nuts and bolts the tactic for you, okay? This is the real world. This ain't textbook stuff. On this bar, what do? Watch it on the hourly, watch it on the 30-minute, and watch it on the 10-minute, and see, and you will see on this bar, when it took out the highs of the previous bar, volume came into it. Volume came into it. I know that, okay? Because we were in it. And it takes off. And then look at it just March. Isn't that nice? So that's how it works.
And where would you have placed your stop if you're getting in on that day? Would you have placed it below, like I don't want to put words in your mouth. Yeah, you explain it. Where would you put your stop?
No, that's a great question. We always manage risk. I'll say it again. A lot of people think about what they're going to make. That's good. We should also think about what we might lose. So by default, what do? Is if I bought on this bar as it was taking out the highs of the previous bar, the high on that bar is 190.72. Taking out those highs, it opens, it drops. When it takes out those highs, I'm going to buy that stock. And you can say, well, Pat, where are you going to buy it? Sheet fire, folks. I'm going to buy that sucker as close as I can to 190.72. Maybe I get filled to 190.80. If it takes out the lows of this bar, all righty, what does it tell me? I'm wrong. I'm wrong. If it does that, I'm going to sell at least half my shares because I was wrong.
So right down here, half is off.
You got it. Lows of that bar. Low of that bar. Keep it really tight. I'm not into the 5 to 7% stuff on stuff. I want to run it really tighter. And by the way, I did these, okay? I'm not looking at 5-minute charts. I'm just looking at the day chart. Look at daily, look at hourly, look at 30-minute, look at 10. Oh, and by the way, again, this is really important. That's the weekly. That's what we were looking at. This was where we had this on the VIPs bought this sucker. That was a good move. That's nice. And then you know what you do? You hit the road. You hit the road and say, that's enough. Okay, now I'm going to do something else here if I can real quick. Can I?
Yeah, go for it.
I'm like a kid with a toy box. Here we go. I want to try to give a couple of examples in here that past examples. All right, I'm going to pull up a chart in here real quick. Can I do it, Michael? Am I taking too much time? Am I okay?
Yeah, you're good.
Okay.
You're good. Is it all right with everybody else that's here? If Pat keeps going?
Ordering pizza if we have to.
Yeah.
What do you say?
Everybody's like, hell yeah, awesome. Let's do it.
I love it. Just show you some more examples. There's Coop. Boy, that looks like a piece of crud, don't it? And you know what? It is. There's nothing there. But, and again, I need to really stress something here. I'm not in here always bragging about winners. Good Lord, no. Do we have losers? Yeah. Heck yeah. Anybody who never has a loser is doing one of two things. Either they never invest or they're a liar. Okay? But you got to manage them. We manage them. We keep our, if we're really, really stringent with our entries, here, folks, right here. It's good above the line. and it's bad below. It's that simple. The best ones just push away. You know when you know you got a winner? Because the best ones push away so dang fast on volume, you can get the shares that you want. You're like, by God, I got a winner now. Check this out. We're going to go back all the way. Right there. Look at that. You see this? Look at a nice simple base. It's just going sideways. It's beautiful. In fact, I'll draw a line for you because I'm like a kid with crayons, okay? You got a downward sloping trend line right there you can draw. It's simple. It ain't nothing fancy, all right? And you want to see something beautiful? I say this all the time, and I know you're getting tired of hearing me say it, but I'm going to say it again. People talk with their mouths and vote with their pocketbooks. Check this out. This is what I like to teach. You can say, oh, I just connect the tops. You can even make it longer than that and say, we'll connect those tops. You know, oh, by the way, some people are really anal with, I've got to connect to the exact top to the penny. No, come on. Get close to it. Get close to it. So you got this line right here, okay? There it is. I'll get rid of that one. We'll leave this one up. Say if it pushes through this line, simple line, simple. By the way, I have to tell you something. When this stock broke out, by Jove, it had either great earnings and or great sales. And I'm not lying. And I'll tell you what, this is January of 2018. Excuse me, 2019. Boy, the time goes fast. You go in back and look and tell me what the earnings or sales were before this broke out. By the way, was it in a leading group? Oh, yes. Oh, yeah. I'm wired tight with it. And you can say, why are you wired so tight? I was feeding 6 people, and I was living off investing profits, so we had to do it, okay? Look at the volume. Look at the volume spike. Comes up, still hangs in, sweet potato pie. There you go. You sell some. Look at the walk up the 8. Isn't that nice? Now, let's suppose you own this. Where are you going to sell some, folks? Tell me about that bar. Is that a good bar or a bad bar? Well, it's still above the rising 8-day, Pat. How was the volume on that bar? It was heavy. There was some selling pressure there. What does that tell me? We better watch out. If it starts to lose the 8, by God, we better take some off. Okay, let's watch it. Oh, starts to fall, but volume's not that heavy. Oh, tell me about this bar. Now we got a lesson for us. You don't know. I kind of like doing this. Did you know that? Can we go till like 9 o'clock tonight, you think, ordering pizza? What do you say?
Well, I think a lot of people would love that.
Okay, I'm sorry, I'm rumming too much. Look at this bar, folks. It gaps up. You see where it closed on this bar? I'm going to enlarge this for you to help you. You see this bar right here? It gaps down and it closes down, but it's above the 8-day, but it doesn't on low volume. The next bar, it gaps up, it runs up and closes near its lows on a pickup in volume. Do we need to panic out and sell on that bar? No, but it's saying we better watch it. Now, do we have to freak out? No. Why not? Because of our tactics, we know the trends pay. We own it down here at around 68 bucks a share. We're okay. We're all right, but we're not going to get sloppy. It starts to fall. Oh, surprise, surprise. Look at the volume pickup. Folks, people saw what we saw and they sold. Gaps up and starts to lift. How's the volume? How's the volume? Lower. Starts to pick up, but on low volume. Gaps up, closes near its lows on a pickup in volume. Oh, I'm going to speed up here a bit, okay? Tough bar there, okay? And then it gets sloppy, okay? We're going to stop on that. But anyway, I probably talked too much on that. Can I do one more, Michael?
Go for it, man.
Okay. I'm just trying, what I'm trying to do here.
Well, which ones what are you looking at?
I'm looking at.
We've got a request.
Pardon?
We've got a request.
Oh, go ahead. I'm sorry. What is it?
To go through the GSX, well, what it's doing right now.
Sure.
And, that one's not from that other guy, Mike. This one is from Anthony.
Okay, Tony, Anthony, good talking, buddy. Here we go. We know about.
This is one that I actually didn't know about until Jim Ropel came on the show and he mentioned it, put it on my radar, and then I started to look at this too, and I think that put it on. More people are aware of it now, and just to know that you're aware of it is good to know too. But let's walk through this.
So here's where we had it from before, right? Right there, and then it just marches up. Look at the trend up the 8-day.
Yep.
Sweet potato pie. Is that great? This is in a crappy market. It's held in. So let's continue on. So here we are now, right now. All right. This volume bar here was a big volume bar, lifting off the moving averages. I saw these tops here, all right? And I said, this may set up something.
Mm-hmm.
And it starts to pick up on a slight pickup in volume right here, okay? And I'll tell you what we did. We bought a little. We bought a little right here across this shelf, okay? And that's where we're at right now. Right now. Got a little bit, in fact, I'll be more specific. Bouncing off the moving averages, I bought a little bit more bouncing off the 20, or bought some, excuse me. Bought some right here, all right? Taking this out, added to it right there because the volume was good. So we're in this. Are we down a little bit because we added up in there? Just a hair, but not much. Volume's good. Here's the weekly. Folks, what's today? Today's Thursday. It ain't the end of the week. We got one more today to go. This already has heavier volume on the weekly than the previous weekend. It's only Thursday. There you go. That's how we built a case. Is it going to continue? I don't know, but I will share this with you. You want to know why we bought it? You know, we talk about starting with the weekly or the daily and then narrowing it down to a lesser time frame. This is the hourly chart. Look at that volume. Look at that volume spike. That's why we bought more. Take it to 30-minute. Look at the volume. It was huge. Now, is it going to work? I don't know the future, but I do know it's a great company in a great group, and it has a good base, and it had good price and volume. So I've got to take a shot with it. Now, did we go full with it? No. Remember the rules of proper pyramiding. You start with 50%, and then you add as it goes up, 30%, continues up, you buy 20%. Have we bought any more? Why? It hasn't gone up enough yet. We're positioned. If it drops, we will keep the loss extremely small. You can say, Pat, what do you mean? If this thing starts bleeding back below the lows of this bar, I may sell some off for an extremely small loss. But so far, it still looks okay. We'll wait and see. And again, I stress, this company has either great earnings and or great sales. That's a fact. That is a fact. So, okay, go ahead and hit me, Michael.
Great answer, man. I'm like processing. I'm processing like that. That was great. Thank you for that.
By the way, am I going too fast? Am I okay?
No.
Okay.
No, you're talking to a New Yorker that talks fast, so I'm used to it.
You're great.
Question from Roy. Well, what is your tactic on buying gap ups?
Great question. Great question, Roy. This is what I'll do. First off, I'm going to be blunt. I'm always very careful buying gap ups. One of the things that I have found that works really good is waiting like 20 or 30 minutes. Let it gap up. Watch the pattern like on a 10-minute chart on a lesser time frame. Watch and see if it forms some kind of a small shelf or base for 20 minutes, 30 minutes, an hour. Find a really clean, precise entry spot. Gosh, I wish I could think of one. And I can't right now. I'm looking at the stocks here. And I can't think of one today because I didn't have any gap ups. But find one. If it gaps up, don't chase gap ups. Be really careful. I'm going to pause here and say something for you folks. If you're going to buy a gap up, please go small. Do not go big. You say it might go a lot higher. Yeah, you might buy the top of the day and the thing drops and you get stuck. Always measure risk. So what do? It gaps up. Watch the chart, 20 minutes, 30 minutes, 45 minutes. See if it forms a pattern on a 10-minute chart where it's going sideways for 20 minutes or so. And then if it has a really clean top, it pushes through the top of that line. And when it does, look for volume. If volume doesn't come into it as it breaches the top of that line on lesser time frames, don't buy it. It's that simple. That simple. If it does, you can buy. But now do you say, Patrick, do you take a full position or 50%? No. Why? It gapped up. Chasing a gap up adds extra risk to your entry pattern, entry tactics. If you take on that extra risk, you may make money, but you've also exposed yourself to a bigger loss. A lot of people always think about, hey, what I might make, what I might make. Never lose sight of what might I lose, all right? And I'm not trying to sound negative. That's the real world. I come back to it. The quote, you'll never go broke taking a profit. Yes, if your losses are bigger than your gains, you'll go broke. So manage it accordingly and ease into it that way. And it works. It works. Anyway, go ahead, good buddy.
That's a great tactics there, man. Thank you.
Sure.
Thank you. Another really good question from Roy. What has been your biggest mistake that was a teachable moment?
I had to really ponder that for a minute because God knows I've made a lot of mistakes. Are we talking just about the market? Just kidding. I'd have to say, that's pretty good. Hey, I only screw up on days that end in Y. So I'd have to say, going back in time over 30 years, I had somebody manage my account years ago when I was in the Black Hills of South Dakota. I'm going back almost 25, 30 years, and there was no internet or anything. And he managed the account, and he didn't limit losses. And we lost $200,000, and I didn't know it in the account. I didn't know it till I came home and I sat at my desk, which was a third of the account was gone. That I'm going to be honest. I sat at my desk and cried. That was awful. That was an awful day. I called him up and I'm like, what happened? Oh, we'll have to talk. And we did, but we humped on it and got it back. Coinciding with that, I'd have to say, for me, my biggest mistake was trying to do too many different things, trying to have too many different techniques, trying to be a guy who's a trend trader, but also, I'm going to try to day trade too. And I've got too many, you have too many irons in the fire. I would rather be, the phrase, he's a jack of all trades. I would rather be an ace of one thing and master it than try to, let's try a little of this. Well, let's take a shot at this. No. That would be one of them. And I think the other one, Michael, because this is an important question, and I take every question very seriously. Never argue with price. And the other thing I think is important, work really hard to find a couple of clean and simple patterns, chart patterns, and techniques that work for you, and stick with it and turn off the noise. Don't get wrapped up in looking at the latest hot thing, the latest hot trend. And also, this is just for me, I don't look at 5-minute charts. I find if I do, there's too much emotion in those lesser time frames. I mean, this move here, are like the Tesla move. Oh God, I got to get, look at it, it's dropping. Oh, geez. No, pull back and look at the daily, the weekly, maybe the hourly, and let the thing work as long as you can. And like right here, I'll show you this one. Bought it right there. This was a keyless stock. See the volume on that bar? Does that come up okay in video?
Can you share your screen again?
Pardon me?
Can you share your screen again?
Sure. I apologize.
That's okay.
Screen coming up. Try it again.
There it goes. See
You get
something?
the video?
Yes.
Okay,
Yes.
good. Sorry about that, Michael. I'm sorry.
Okay.
Okay, so right here, it goes up and then has a quiet inside bar on less volume. And then it picks up again. Look at the volume surge there, folks. It's picked up right there and it runs up. And you've got a gap here, and you have a gap here, and you have a gap here. You got to be careful with the price gaps. You get emotional price gaps like this, what are we doing? You're selling into strength. You combine it with what the market's doing, and you got to be careful. It does this bar here. Look at the volume in this bar. Sell more. Look at the volume on this bar down to the 8-day. Sell more. Right here. Right here. Look at the volume when it loses the 8-day. The rest of it is sold. Sold. Gone. By the way, in this entire move, never looked at a 5-minute chart. No, just looking at the daily. Let it work. But it loses lows, loses moving averages. You sell. Look at the volume on that bar. And you know what? Thank God we did, because you're selling here at around 290. Kind of makes you sick to see it at 190. All right? You managed it. You just managed it. And the whole time, no 5-minute charts. Just watching the daily, maybe the hourly. And that's it. Go ahead and hit me, buddy. I mean, I could show you a ton of these, but I'd rather answer questions. I think that's more important.
That's fantastic, man. I want to ask you too, well, what's the best ways for people to get in contact with you if people are looking to find you or more information about, well, what it is that you do?
Good question. Thank you. I'm Patrick Walker. All right. I'm in the Witness Protection Program, so you can't find. Okay, I'm teasing. I got to share this with you. Years ago, I was a scout leader, and I took a troop out. I think this is a cute story. I took a Boy Scout troop out to Colorado for a high adventure up in the mountains, and we're going into a national park, and they're all set to go camping. And there's this older lady at the desk, and she says, well, I need to see some form of identification. And all these scouts are by me. And I lean across the desk and I said, ma'am, I'd give it to you, but I'm in the Witness Protection Program and I can't divulge that. She goes, are you really? Crazy times, buddy. Crazy. So, what's the question again, Michael?
Best ways for people to get a hold of you.
Thank you. I'm Patrick Walker. I'm on Twitter. You can contact us at missionwinners.com. Patrick Walker. And again, it's just WALKER, missionwinners.com. And if you have any questions, I'd love to work for you, but I'm not trying to sell you or anything like this, but I'd love to work for you. You can follow me on Twitter. I have 2 feeds. I have the big Twitter feed at missionwinners.com. And then I have the locked Twitter feed at missionwinners.com. And on the locked feed, that's for VIP members only. And I'll just share, just to tell you, okay, every night I scan the charts and I make a video for the key list video for members, for VIP, we call them VIPs. I make a video analyzing each chart, the good, the bad, and the ugly on each chart, and giving a specific buy price to the penny, where we want to buy it and what to look for. The video normally is between 15 to 20 minutes long. I don't try to make it much longer than that. I analyze each chart, like this chart right here. That was on the video before it went. Right there, inside bar, takes out these. The market was good back then, by the way. We made a video on it with the buy price. And the next day advances. And then what do I do for the VIPs? I call it out and I say in our room, I am buying NVIDIA. And there's a little icon that we use, a green icon. Green is buy, red is sell. And they go in and buy it. So we offer that. We also put the key list in on tabular in a text format that goes with it, with the same ticker symbols in the same order and the same prices, and then notes related on some of the charts that might be relevant. So we give that to people, and every day for the VIPs, I'm in there and I do 2 things in there that are really important. I'm giving potential buy and sell alerts, things, but also I'm constantly educating and answering questions. Again, my background was in education. I said this, my final was 24 pages typed. I've got high expectations. So what am I doing? All day long, I'm asking questions and answering their questions. And after I ask their questions or ask a question, I give them an answer, explaining why. And I'm constantly posting charts so that they can see what I'm talking about. And I'm really challenging them. I'm not to be a jerk, but what would you do here? And then the questions come in and we have discussions. And so I say this, to know that 2 + 2 = 4 is fine, but to know why it does is knowledge that's transferable to other situations. Hey folks, I know what it's like to get so freaking frustrated trying to figure this animal out. Have I ever lost sleep over this? Yeah. You're like, shoot, I don't understand. I don't know why this is happening. I try to be the guy that can help explain a few things. And again, I've been doing it since '86, so you pick up some things, some tactics and discipline to help you weather the storms, tactics to ride trends as long as possible. I can't stress that enough. And it works. It works. So yeah, that's what we do at missionwinners.com. And I do get questions, and I make videos for VIPs almost every day. Susan's got a question about whatever, Google, and I'll make a video on it. And it's posted directly to her, sent directly to her. And if it's a broad-based video, I do videos almost every day on the Max List, where we just talk about, you can say, Patrick, what's the Max List? The Max List? Does that slide into the window, Michael?
Yep, that's there.
There you go. Right here, folks. That's the Max List. This is a list I developed myself. These are the big institutional names that mutual funds need to own at certain times, or their managers will be fired. Big names, big names. I look at these every day, and there's good money. No, there's not good money. There's great money in this list right there. So anyway, we provide that every day. We start on Sunday night. Oh, and then we make a training coaching video normally on the weekend also, extra videos like this. But on Sunday nights, you get the key list in video format and in tabular format, and then I'm in the room all day. And I'll also share this with you. And if there's any VIPs out here listening, and I bet there are, I think they would attest to it. On God, I don't have any other windows open. That's it. Just our room. That's it. Am I surfing a bunch of stuff? No, I don't need to. It confuses me. I don't need to. And it's not because I'm arrogant. That's not it. It confuses us to the point of where we lose track of what we're after. Do I have the TV on? Yeah, I have TV on, but am I watching cable, watching, what's going on CNBC? No, I don't. And here's why. Bias will enter into your thought processes, and it doesn't allow you to think clearly and make good decisions. Price and volume talk, and I'm going to listen to it. But I'll also say this. I'm cognizant when there's a Federal Reserve thing going on or something like that. Yeah, I'm aware of that. Anyway, long answer, but I want to be thorough.
I appreciate it, Patrick. Thank you. And yeah, man. I'd love to have you on again. And soon too. I don't want there to be a year or so that comes by. We'll talk after this. But if you'd love to come back at some point, I'm sure that everybody would love to see you again.
You bet. I appreciate it. Hey, Michael, thank you for asking me. I appreciate the opportunity. I love teaching this. I love the markets. I love the challenge of the markets. They're honest. They won't lie. We want to get in line with what is. That's it. And yeah, it's fun making money, but it's the challenge of it. That's wonderful. It's wonderful. And I'll share this with you. Just a thought. If you're not humble, the market has a lot of ways to humble you. And so I'm trying to teach ways that we can consistently do well and watch it grow and be thankful for it. Just be thankful for it. That's kind of my deal. That's what I'm after. We're all here for a short period of time. If we can't help each other, then what's the use for being here? Anyway, that's me, Michael. We've talked before. You kind of know how I am.
Absolutely. Well, again, Patrick, thank you so much for coming on the show, man. Well, what a blessing Oh, well, what incredible value too. I can't wait to go back and watch the recording of this. And for everybody that's that registered, they're going to get the recording of it right away. For everybody else, it'll be up on YouTube in about a week or so once my editor's done with it.
Sweet. So
Fantastic.
it's good connecting.
All right, man.
Michael. I appreciate
Thank you, everybody, for joining us. Thank you, Patrick, and have a great night. Stay well.
Amen. You also, brother. Good seeing you.
Good seeing you too.
Thank you now.